Once again. Thank you for everything you've done for us. As we are continuing our studies, Father, give us a spirit of understanding and help us so we make good use of our time. In the mighty name of Jesus, we pray. Amen.
Amen. Today we want to continue from where we left off last Wednesday. We looked at some relevant portions of the Revenue Administration Act. And I think yesterday we looked at recovery of taxes from taxpayers. Today, we want to go to recovery of taxes from third parties. Recovery of taxes from third parties. And I want us to look at this past question before we start the session so that we will be guided as we go through the provisions of the law. This is August 2022, question 4. Madam Comfort, kindly read question 4 for us.
Okay. The Revenue Administration Act 2016 empowers the Commissioner General to use provisions of the Act to recover taxes that have become debt due to the government. Now your firm, Move Ahead Consult, is organizing a seminar for its clients to educate them on tax compliance. You have been assigned to make a presentation to them on the powers of the Commissioner General to recover unpaid taxes from taxpayers. Required. Your presentation should cover the following areas. A. Managers of entities, Section 58 of Act 915, 4 marks. Receivers, Section 59. Then third-party debtors, Section 60, 20 marks.
Okay. So, whilst we are looking at the provisions of the law, then we look at that one as well. So we want to start with recovery of taxes from third parties. Let's not forget that taxes can first and foremost be recovered from the taxpayers themselves. And how does the Commissioner General recover taxes from taxpayers? It starts by they creating a charge over the assets of the taxpayer. We went through all those provisions. We looked at taking possession of the charged asset. We looked at the sale of the charged assets. We look at the release of the charged assets. So that's about creating of charge over the asset of the taxpayer. Apart from that, we also saw that the Commissioner General can restrain an individual from traveling if they have information that you are leaving the country by they writing to the Comptroller General of Immigration to restrain the taxpayer from leaving the country. So that's about recovery of taxes from taxpayers. I would encourage colleagues to read through again. The question we just read was testing candidate on recovery of taxes from third parties, meaning that the next time the examiner can look at recovery of taxes from taxpayers themselves. Okay. So, Madam Comfort, please start with us with section 58, managers of entities.
So, where an entity fails to pay tax on time, a person who is or has been a manager for the entity during the relevant time is jointly and severally liable with the entity for payment of the tax. 2. Subsection 1 applies irrespective of whether the entity ceases to exist. 3. Subsection 1 applies. 3. Subsection 1 does not apply to a manager who has exercised the degree of care, diligence, and skills that a reasonably prudent person in the position of the manager would have exercised in preventing the initial and continuing failure to pay tax.
So before you continue,
4. Subsection 3 does not apply to
1 and 2 is telling us that if a taxpayer fails to pay tax on time, the managers of the entity will be held liable. Okay? It's jointly and severally liable with the entity for the payment of the tax. It went on to tell us again that subsection 1 applies irrespective of whether the entity ceases to exist. Oh, the company has collapsed. They don't care. Commissioner General will go after the managers of that entity to recover that tax. But if, in the opinion of the Commissioner General, the managers of the entity did exercise a high degree of care and diligence, then they would not be held liable for the tax. Okay, now how does the Commissioner General establish that degree of care, diligence, and skill? It is subjective. We don't know. Madam Comfort, please continue.
now. Please, can you hear me?
Yes, I can hear you.
Okay, so subsection 4. Subsection 3 does not apply to a manager who is a current partner of a partnership. 5. An amount payable to the Commissioner General by a manager under this section is a personal tax liability to the manager.
Okay, so
6.
Madam Comfort, what this is telling us is that if you are a manager of an entity and that entity fails to pay the tax and they have come after you, that tax now becomes your personal liability. Please continue.
So, subsection 5. An amount payable to the Commissioner General by a manager under this section is a personal tax liability of the manager. Okay. Now, where a manager pays tax by reason of a liability under subsection 1, the manager may recover the payment from the entity as a debt due. 7. In this section, manager of an entity includes a person purporting to act as a manager of that entity, and relevant time means 6 months before the event that gave rise to the tax liability of the entity.
Okay, so now we want to look at receivers. Madam Jessica will read receivers for us.
Bosima.
I can hear you, madam.
Sorry, my background is a bit noisy. I beg you. I beg you, Pa.
No problem. Go ahead. That's our future Commissioner General. Please go ahead with your question.
Bosima. Oh, keep quiet now. Bosima, sorry, I was saying my background is a bit noisy.
Oh,
I
okay,
heard you were
okay,
telling
okay.
me to read, so I'll say my
Okay,
background.
okay, that's fine.
Okay.
Mr. Actman,
Boss,
you heard our future Commissioner General.
yes, yes.
Please read for us.
Okay. Receivers. Section 59, subsection 1. A person appointed as a receiver of an asset situated in the country shall notify the Commissioner General in writing of the appointment. A, within 14 days of the appointment, or B, on the date the receiver takes possession of the asset, whichever occurs first. Subsection 2. A receiver shall not distribute asset unless the receiver has accounted for the asset to the Commissioner General. 3. The executor of the estate of a deceased individual or the legal representative of a person who is incapacitated shall complete and submit return under this act on behalf of the deceased or incapacitated person with respect to matters occurring prior to the appointment of the executor or legal representative. 4. The Commissioner General shall, within 14 days of receiving a notice under subsection 1, serve the receiver with a written notice specifying an amount that appears to the Commissioner General to be sufficient to provide for tax due, or that will become due by the taxpayer. 5. A receiver shall, after receiving a notice under subsection 4, a self-sufficient relevant assets to raise the amount referred to in the note after payment of any debt that has priority. And B, pay to the Commissioner General on accounts of the taxpayer the amount set aside. 6, in making payment out of the proceeds of the sales, a receiver shall give priority to unpaid taxes over all other debts of the taxpayer.
Please repeat that for us.
In making payments out of the proceeds of the sales, a receiver shall give priority to unpaid taxes over all other debts of the taxpayer.
Okay.
Okay. 7. To the extent that a receiver fails to set aside an amount as required by subsection 4, the receiver is personally liable to pay to the Commissioner General on account of the liability of the taxpayer the amount that should have been set aside.
So, before you continue, Bosima, we realize that under Section 58, managers of entity, okay, if the taxpayer fails to pay the tax, okay, and the Commissioner General goes after the managers of the entity, that liability becomes a personal tax liability of the managers. And we are seeing a similar provision under receivers. Okay, the receiver is personally liable to pay the Commissioner General on account of the tax liability of the taxpayer, the amount that should have been set aside. If the receiver fails to do that, it becomes the personal tax liability of the receiver. So let's take, for example, the banks that went down. All those who were appointed as receivers, they had obligation. What are the obligations? From where you have read, within 14 days of the appointment to notify the Commissioner General, or on the date the receiver takes possession of the asset, whichever one comes first. So they have to notify the Commissioner General. Very important. If the receiver fails to do all the things that Bosima has read, then that liability becomes a personal tax liability of the receiver. Please continue for us.
Eighth. I'm reading from the 8th section.
Okay.
An amount payable to the Commissioner General by a receiver under this section is a personal tax liability of a receiver. 9. In this section, receiver means a person who, with respect to an asset situated in the country, is A, a liquidator of an entity. B, a receiver.
So if you are appointed as a liquidator of a company, you are what? A receiver. Okay, please continue.
And B, a receiver appointed out of court or by a court in respect of an asset or entity.
Okay, now see something. An asset situated in the country. Did you see that?
Yeah.
So if the issue has to do with an asset situated outside the jurisdiction of Ghana, will this provision apply?
No.
Colleagues, will this provision apply? It applies to assets situated what? In the country. Okay? It applies to assets situated in Ghana. So if the taxpayer has an asset situated in Germany, in Holland, in South Africa, it doesn't cover it. The law says with respect to an asset situated in the country. Bosima, please continue.
Okay. C, risk, a trustee for a bankrupt person. D, a mortgagee in possession. E, an executor, administrator, or heir of an deceased individual's estate. F, conducting the affair of an incapacitated individual. Or G, a successor in a corporate reorganization. Relevant assets means asset held in the capacity of a person as a receiver, and taxpayer means the person whose asset come into the possession of the receiver and includes a deceased individual and an entity that is reorganized.
Please, do we understand? Okay. So whilst we are reading, let's remember this question. Your presentation should cover the following. Once we are done, I'll come and ask Madam Comfort how she would present her answer. Managers of entities, 4 marks. I'll come to Boss Emmanuel, receivers, 8 marks. Now, Madam Belinda is going to read third-party debtors for us. So let's go to third-party debtors. Hello, Madam Belinda.
Yes, please. Good evening. Please, can you hear me?
Yes, I can hear you. I want you to read section 60 for us.
Okay. Third party debtors, section 60. 1. Where a taxpayer fails to file.
Madam Belinda, your line is breaking.
Where a taxpayer fails to pay tax on the due date, the Commissioner General may serve a notice in writing to, as soon as practical, the notice on the third-party debtor. Oh. Maybe somebody can read it. I'll read the next one.
Okay, that's fine. Madam Comfort, kindly read section 60 for us.
So third-party debtors. Now, when a taxpayer fails to pay tax on the due date, the Commissioner General may serve a notice in writing on a third-party debtor. As soon as practicable, after service of the notice on the third-party debtor, the Commissioner General shall serve a taxpayer with a copy of the notice.
Okay,
3,
so please
the
just hold on. This is GRA. Okay. This is GRA. This is Madam Comfort. This is Madam Jessica. Madam Comfort is owing GRA 100K. Okay. Just to simplify things. But she has not been able to pay GRA the 100K. GRA gets to know that Madam Jessica is owing Madam Comfort 150K. Okay. 150K. GRA would then write to Madam Jessica and say, Madam Jessica, we know that you owe Madam Comfort 150,000. Pay us 100,000 cedis. Don't pay it to Madam Comfort. Pay to us. In that scenario, Madam Jessica becomes a third-party debtor to GRA. Okay? Madam Jessica becomes a third-party debtor to GRA. Madam Comfort, please continue.
So my question is, how would GRA know that somebody is owing me that they'll go and collect?
Okay. There are so many ways they can find out. For example, if you check the financial statement of the company, okay, you will have an idea that, oh, this person is owing Madam Comfort Limited. Madam Comfort, do you understand?
Okay. Makes sense.
You get it?
Yeah.
Okay. Please continue for us.
So where was I?
Subsection 3.
A third-party debtor shall, on receiving a notice under subsection 1, pay to the Commissioner General by the date specified in the notice an amount not exceeding the lesser of A, the tax due by the taxpayer, B, the money owed by the third-party debtor to the taxpayer, and C, the amount specified in the notice. 4, the date for payment specified in the notice shall not be before either A, the date the money owed by the third-party debtor becomes payable to the taxpayer.
Okay, so let me explain that one, Madam Comfort. So even though Madam Jessica owes you, maybe per the contract, there are specific dates that Madam Jessica is expected to pay you. Okay? That is what subsection 4A is saying. The date the money owed by the third party debtor becomes payable. So maybe per the contract, you are supposed to pay her, let's say every 3 months, a certain amount of money. Please, do you get it? You can continue.
So 5.
To get a better understanding, just start from 4 all over again.
Okay. So the date for payment specified in the notice shall not be before either the date the money owed by the third-party debtor becomes payable to the taxpayer or is held on behalf of the taxpayer, or B, the date the third-party debtor is served with the notice. 5, a third-party debtor who is served with a notice under subsection 1 shall not pay any amount to the taxpayer until the Commissioner General withdraws the notice.
Very important. Okay? Very important. Shall not pay any amount until the Commissioner General withdraws that notice. Okay, continue.
Now, 6, an amount payable to the Commissioner General by a third-party debtor under this section is a personal tax liability of the third-party debtor.
Have you seen this thing running through? When we look at managers of entity, it popped up. When we look at receivers, we saw it there. Third-party debtor, it's also here. Okay, please continue.
Now, the following are treated as money owed to a taxpayer. A, money currently owing, or that may subsequently become owing to a taxpayer. B, money held, or that may subsequently be held for or on the account of a taxpayer. C, money held, or that may subsequently be held on account for another person for payment to a taxpayer. Or D, money held by a person who has authority from a third party to pay the money to a taxpayer. Section 8. Now, in this section, money includes a debt obligation denominated or payable in money, and third-party debtor in relation to a taxpayer means a person who owes money to the taxpayer.
Okay, a person who owes money to the taxpayer. Great. Great. Now we want to look at compliance with notice. You remember the illustration I gave, this illustration. Madam Jessica has nothing to do with GRA, but she gets a notice from GRA that Comfort is owing us, and we hear you are also owing her, so pay that money to us. If Madam Jessica complies with that notice received from GRA, what will be the implication? That is what we are looking at under section 61, compliance with notice. Okay, compliance with notice. Madam Hannah, can you read that for us? Compliance with notice. Hello, Madam Hannah. Okay, Bossima, kindly read that for us.
All right. Compliance with notice. Section 61. I read subsection 1. A third-party debtor who pays money to the Commissioner General in accordance with section 59 or 60 shall be A, treated as having acted with the authority of the taxpayer and of all other persons concerned, and B, indemnified in respect of the payment against all proceedings, civil or criminal, and all processes, judicial or extrajudicial.
So, if Madam Jessica pays the money to GRA, okay, she is indemnified. Madam Comfort cannot do her FOCO. Okay, please continue.
You should try it.
Subsection 2. Subsection 1 applies despite any provision to the contrary in an enactment, contract, or agreement. Subsection 3. A notice under subsection 59 or 60 ceases to have effect once the tax or obligation referred to in the notice is paid or otherwise satisfied. Subsection 4. Where a third party served with a notice under section 59 or 60 is unable to comply with the notice by reason of lack of money owing to or held for the taxpayer, the third party shall give notice of that fact to the Commissioner General. 5. A notice under subsection 4 shall A. Be in writing. B. Set out the reason for the inability to comply. And C. Be filed with the Commissioner General as soon as practicable after the third party becomes aware of the inability, and in any event before the payment date specified in section 59 or 60.
So if you think that you don't owe Madam Comfort, but they have written to you in error, you have to let the Commissioner General know. Please continue.
Okay. 6. The Commissioner General may, on receipt of the notice under subsection 4, by notice in writing, serve on the third party, A. Cancel or amend the notice given under section 59 or 60, or B. Reject the notice filed under subsection 4. 7. The filing of a third party notice has no effect on the third party's personal liability for an amount under section 59 or 60 unless the Commissioner General cancels or amend the notice given under section 59 or 60. 8. In this section, third party means a receiver served with a notice under section 59 or a third party debtor served with notice under section 60.
Okay, so receiver is also what? A third party. Okay, receiver is also a third party. Now let's look at recovery from agent of non-resident, Madam Comfort. Hello, Madam Comfort. Recovery from an agent of a non-resident person.
Freezer.
Oh, okay. Please continue for us.
Okay. Recovery from agent of non-resident. 62, subsection 1. Where a non-resident taxpayer fails to pay tax on the due date, or the Commissioner General believes on reasonable grounds that a non-resident taxpayer will not pay tax on the due date, the Commissioner General may, by notice in writing, require a person who is in possession of an asset owned by the non-resident taxpayer to pay tax on behalf of the taxpayer. 2. A person served with a notice under subsection 1 is required to pay tax up to the market value of the asset, but not exceeding the amount of the unpaid tax. 3. For purposes of this section, A taxpayer who charter an aircraft or ship under a charter for a period of more than 3 years is treated as owing the aircraft or ship during that period. B. The captain of an aircraft or ship is treated as being in possession of the aircraft or ship. C. A trustee is treated as being in possession of trust assets. And D. Trust assets are treated as jointly owned by the beneficiary of the trust. 4. The Commissioner General may, by service of notice in writing, require a person, a resident partnership or resident partner to pay tax due or that may become due by a non-resident partner. 5. A resident partnership or a resident partner are jointly and severally liable to pay the tax up to the amount of the shares of the non-resident partner in the net asset of the partnership.
Okay.
6, an amount payable to the Commissioner General by an agent, resident partnership or resident partner under this section is a personal tax liability of the agent, resident partnership or resident partner. 7, where a person, including resident partnership, making a payment to the Commissioner General in compliance with a notice under subsection 1 or 4. A, the person may recover the payment from the non-resident taxpayer or non-resident partner and may retain out of any asset of the non-resident taxpayer or non-resident partner in or coming into the possession of that person an amount not exceeding the payment. And B, a non-resident taxpayer, non-resident partner, or any person shall not have a claim against the person with respect to the retention.
Okay, thank you very much. So let's go back to our question. Okay, and see how to attempt this particular question. Required, your presentation should cover the following areas: managers of entities, receivers, third-party debtors. The Revenue Administration Act 2016 Act 915 empowers the Commissioner General to use provisions of the Act to recover taxes that have become debt due to the government. Your firm, Move Ahead Consult, is organizing a seminar for its clients to educate them on tax compliance. You have been assigned to make a presentation to them on the powers of the Commissioner General to recover unpaid taxes from taxpayers. So we are to look at managers of entities, receivers, and third party. So let me start with Madam Hannah. Managers of entity. What are you going to incorporate in your answer? What are you going to talk about? Hello, Madam Hannah. Hello. Okay, I can't hear her. Madam Belinda, managers of entities.
I didn't really join from the beginning.
Okay, but just make an attempt. It's part of the learning process. Okay, but you joined when we're talking about receivers, right?
No, I think it was the third-party data that I really had. The receiver, the network wasn't good.
Okay, so tell me what you know about third-party debtors. That is for 8 marks.
So, that one, I heard about the commissioner, let's say, for third-party debtors, when there's a client or a taxpayer who owes the commissioner, that's GRA, the commissioner shall send a notice to a third party, which of whom has to make payments to that taxpayer. So then the notice from the commissioner will state the date that the third party is supposed to pay the amount that is owed by that taxpayer,
okay,
straight to the commissioner. So then there are grounds that the third party should pay the commission. It shouldn't be more than the amount specified.
It shouldn't be more
Sorry,
than the tax owed by the taxpayer.
The tax owed, yes.
Okay.
Yes.
That's a good attempt.
Yes.
That's a good
Thank
attempt.
you.
Let's hear from Bosima.
I'll polish it. I'll thank you.
You're welcome. Bosima, let's hear from you.
Okay. Managers of entity. I will first talk of it's been under recovery from third parties. It's one of the tools under recovery from third parties. And manager, recovery from manager, I've noticed first when the company fails to pay tax on time, that's the key thing there. When they fail to pay tax on time,
okay,
then the managers will be liable to pay that tax jointly and severally.
Okay.
But with this, there's exception where a manager exercises due care or he's diligent. When this happens, that manager will not be treated or will not be liable to the liability.
The tax. Okay.
Yes. Yeah. But if they did not exercise due care or skills, then that liability become, even though it's a company's liability, it becomes their personal liability.
Okay.
And yes, though when they go ahead and pay, they have the right to be refunded, or it becomes a debt to the entity. That's the relationship.
You have the right to seek a refund from the company.
Exactly. Yes. That's about the manager of an entity.
Okay. Would you want to talk about receivers and third parties, just in brief?
Oh, okay.
So that Madam Belinda can.
One thing about receiver, it's one key thing is the assets must be situated in Ghana. So immediately you have been appointed as a receiver in relation to assets situated in Ghana, you have 14 days to notify the commissioner.
Okay.
Or immediately the asset comes to your possession, whichever comes first. But when this happens, then the receiver, the two part of it says you shouldn't distribute any of the assets until you notify the commissioner.
Very important.
We move on to the subsection 3, talks of matters when you are appointed as a receiver to a deceased person or incapacitated person. You are supposed to file a return that covers things that happen prior to your appointment.
Okay.
So by all means, maybe prior to your appointment and after your appointment, something will happen, but you are limited to notify the commissioner or file a return regarding things that happen prior to your appointment.
Okay.
Immediately you are appointed as a receiver, the Commissioner General will serve you a written notice specifying an amount that appears to the Commissioner General to be sufficient for the tax paid, so that you are supposed to sell part of the asset to cover that. And if you fail to do this, it becomes a personal liability to you. And after selling the asset, the tax becomes priority over all other debtors.
Very important point. Okay. I think you have demonstrated your understanding of the key points in the provision. I really appreciate that. Thank you. Now, there is another question I want us to look at, and it is the knowledge acquired in the sessions we have read together that we are going to apply in solving this question. So I want Madam Belinda to read question 1B. This is the immediate past paper, February 2024. We are looking at question 1B. Madam Belinda, please read for us.
Okay, please can you hear me?
Yes, I can hear you.
Okay. The managing director of Obey Company Limited, Mr. Samuel, has presented a letter from the Ghana Revenue Authority to you with the instruction to object to the demands of the Commissioner General. In the said letter, the Commissioner General requested that Obey Company Limited should pay an amount of 1 million Ghana cedis. That's its owed Easy Company Limited, a tax defaulter, to the Ghana Revenue Authority. Mr. Kpei has confirmed that Obey Company Limited actually owes Easy Company Limited the said amount of 1 million Ghana cedis.
Madam
But
Belinda,
he doesn't
please pause. Let's try to
want to
establish the
comply
link.
with the
Okay, pause.
Okay.
Let's try to establish the link. So this is GRA. Who is Obey Company? Obey Company.
third party.
And we have Easy Company. Who is owing GRA?
Easy Company.
Easy Company is owing GRA. Okay. And Obey Company is owing Easy Company. Is that a connection?
Yes.
And GRA is asking Obey Company to do or to pay the money. Please continue.
Yes.
So you can start
But
from
he doesn't want.
where in the letter, in the said letter, start from that place.
Okay.
From here.
In the said letter, yes, in the said letter, the Commissioner General requested that Obey Company Limited should pay an amount of 1 million Ghana cedi. That's its owed Easy Company Limited, a tax defaulter, to the Ghana Revenue Authority. Mr. Kpei has confirmed that Obey Company Limited actually owes Easy Company Limited a said amount of 1 million Ghana cedis. But he does not want to comply with the Commissioner General's directives because there is a contract between the two companies, and Obey Company Limited has agreed to pay the amount owed Easy Company Limited within 90 days.
Please read that portion again. Let's get it clear.
Hello?
Please read that sentence again.
Okay. Unless I start from. Okay, Mr. Kpei has confirmed that Obey Company Limited actually owes Easy Company Limited the said amount of 1 million Ghana cedis. But he doesn't want to comply with the Commissioner General's directives because there is a contract between the two companies.
Because there is no contract.
Okay. The cancellation, it wasn't.
Okay. It's no contract.
There is no contract between the two companies, and Obey Company Limited has agreed to pay the amount owed Easy Company Limited within 90 days.
Okay.
Required. Advise Mr. Samuel Kwe, the Managing Director of Obey Company Limited, on compliance with notice from the Commissioner General as provided for under Section 61 of the Revenue Administration Act 2016 Act 915, 10 marks.
Good. So what you have to do here is to read the case very well and identify the issues in the case so that you can speak to them. So let me start. Madam Comfort, what did you identify in the case when Madam Belinda was reading?
Well, I realized that somebody has gotten himself into trouble by owing GRA.
Okay.
And they have not paid the money.
Okay.
But luckily for them, somebody too is owing them. So GRA being a very, very serious people have gone to the other person owing that this one is owing us. So give us the money that you are supposed to pay back to him. However, he's of the view that no, he has no contracts. This guy actually looks like me because, I mean, it really makes sense. Thank you.
Okay. Thank you for your thoughts. Let's hear from Madam Belinda as well. She read it, so I'm sure she may have spotted a lot of issues. Madam Belinda, what are the issues that you have identified?
Okay, please, I want to continue from where Madam Comfort left off.
I like the telepathy between the two of you.
Mr. Nie
He's
London.
my best friend.
Okay.
Okay, so then Mr. Samuel Kwe, he's saying that there's no contracts between the two of them.
So
But
my understanding of that statement is that he's trying to say that there's no contract between Obey Company Limited and GRA.
Oh, okay.
Is that not it? Or is he trying to say there's no contract between Obey Company Limited and Easy Company Limited? Is that the understanding?
Yes, that's what I understood.
Okay, that's fine. So let's.
But it should rather be between GRA and them, because then if you've agreed to pay within 90 days, then there was a contract. I mean, there was a transaction that brought about that liability.
Exactly.
So I'm perceiving that it's rather GRA and his company that he feels there's no contract, so he doesn't want to comply with the directive given. Yes, please.
Okay, that's fine. So, Boss Ima, let's hear from you. We now want to look at the issues in the case. The issues in the case.
Okay. Then, Bosima, can you go up small? I want to use the drawing. Okay. Easy Company is owing a debt. Owes GRA. At the same time,
there is also Obey.
Yes.
Company. Okay.
Also owing
this one. Then we have Easy Company. Okay.
Yeah.
Now I can use this to make the connection.
All right.
Okay. This man is owing GRA. And this man is also owing Easy Company. GRA is going after this man. Do you get it?
Okay. Yes.
So, Bosima, before you start with your submission, you see the intro, the managing director of Obey Company Limited, Mr. Samuel Kpe, has presented a letter from the Ghana Revenue Authority to you, the tax consultant, with the instruction to object on the grounds that blah, 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 blah. So in my opinion, in trying to address this issue, you can start by saying that taxpayers have rights under the law. Okay, these rights include the right to be represented, the right to object, okay, the right to confidentiality. So Mr. Samuel Ekpe's decision to object to the notice received from the Commissioner General is within his right. Do you get it?
Yes.
It's within his right. Secondly, you can go on to state that in Mr. Ekpe's quest to object to the notice received from the Commissioner General, we need to provide the grounds on which we are objecting to that notice received from the Commissioner General. So why is he saying that he will not pay the money? Bosima, do you get it?
Yes, because he sees that there's no contract between him and
Aha. You need to provide the grounds on which you are going to object. And even that objection has to be done within 30 days. If 30 days elapse, you should forget about it. But the real substance of this question is about Section 61, compliance with notice. So, you, the tax consultant, having given that introduction, would then tell Mr. Samuel Ekpe that even though there is no contract between Ghana Revenue Authority, okay, and Obey Company Limited, Ghana Revenue Authority has the power, okay, under the provisions of the law and the recovery of taxes from third party to collect that money from him. And that is what exactly the GRA has done. Okay, so you, the tax consultant, you go a step further to tell Mr. Samuel Ekpe that he should forget about the fact that maybe later Easy Company Limited will take him to court. Once he pays Ghana Revenue Authority, he's indemnified. Okay, Easy Company Limited cannot do them anything. Bosima, are we fine?
very, very.
Okay.
Very, very.
Madam Jessica. Hello, Madam Jessica. Okay, she can't hear me.
Bosima. Hello,
Do you have
Bosima.
any addition to make?
No, today I don't have any addition.
Okay. Madam Comfort, any addition?
I think it has been killed.
It has been killed.
Yeah.
Okay. Great. So that is it from recovery of taxes from third parties.
Please.
We now want to look at refunds.
Uncle Ato,
Yes, madam.
please, I have a question.
Please go ahead.
Did they state the formats that the solution should come in, whether it's a memo or a report? If they are silent on it, how do we present it?
There's a
Okay,
clue.
sorry.
They say advice.
Okay, so we have introduction then,
Yes.
or
So
please.
if it's an advice, okay, what you can do is you write advice on blah, blah, blah to, what's the name of the company? Obey Company Limited, you underline. Okay. Tax advice to Obey Company Limited, then you underline. Then you start with your introduction. Okay. That it is.
Okay, so you don't need an address or something, or you can put your name, the tax consultant, and you put an address and date. Then you write advice.
Oh, that will look like a memo type or something. Okay, but if you choose to just write the fact that, okay, you have address to, did I say address? Advice to Obey Company Limited or tax advice to Obey Company Limited, you underline your introduction. Okay, all the issues that you identified in the question, you write the issue, you underline, you write something on it. You write the issue, you underline, you write something on it. Do you get it? And you
Okay.
give your conclusion.
Okay. So the conclusion is what you tell him that he has to comply with the
Yes.
commissioner's notice.
Considering the fact that if he obeys or adhere to the instruction or the notice from the Commissioner General, he will be indemnified. You are recommending that he should heed and pay that money to the Ghana Revenue Authority. However, if he still insists that we should write an objection letter to the Commissioner General, you are willing to do so.
Ankato.
Yes, sir.
Okay, but would sorry.
Once it's an advice, can we also caution him that if he fails, then, okay, in the first place, he's not supposed by the law not to pay anything to, is it Obey Limited or something, after receiving that notification. And if he still fails, then it becomes his personal liability. It becomes the opposite. Can we caution them from that angle too?
Yes.
Oh,
that
okay.
should be in your answer.
Okay.
Okay. That now that he has become technically a third-party debtor, if he fails to pay the money, it will become his personal tax liability. Okay. And based on that, you can advise him to do the honorable thing to pay that money to Ghana Revenue Authority. And one of the things we need to learn as aspiring tax consultant is diplomacy. You don't impose your opinion on your client. Bosima.
Oh, okay.
Do you get it? Obi oho peman sopa. You tell the person that based on your understanding of the provisions of the tax law, you think that they should do this or do that. The person will tell you, nah. Okay. This example I'm going to give is, it's not related to our discussion, but a colleague went to one of the financial institutions to withdraw his money, and he realized that his money has suffered some haircut. He said he wants to take the financial institution to court. The way I look at him, I'm not sure he saw me. If he saw me, he wouldn't have said that. Does he have what it takes to take that financial institution to bank? Sorry, to buy it. I don't think he has it. You get it? Okay, so let's continue.
Sorry, please, one last question.
Okay, go ahead.
Did the law state that we can object to such a notice?
The law says that you can object to a tax decision. And a tax decision is a decision made, any decision made under the tax law.
Okay, so this qualifies as a tax decision.
Now, I'm now asking you, is it a tax decision?
Because when I read it, I felt it's one of those ones that you cannot object to. So then when you mentioned at the end of the conclusion that you can tell him that you can go ahead and object to it,
Tax decision, we have to, notice from Commissioner of Assessment is a tax decision. And
let's look at it.
I think that's 42 or something. No, 42 would be objection. Yeah.
Yeah. Madam Belinda.
Yeah, tax decision 41.
Madam Belinda, are you there?
Yeah, so this one, I read it to the last time.
Or you let your twin sister read for you?
Oh, I can read.
You read.
I can read. One, a tax decision is a decision made by the Commissioner General under the tax law. It does not include a decision or omission to issue, refuse, or revoke a practice note, class ruling, or private ruling. A decision or omission
the first part is okay. This portion, I'm okay with it. A decision made by the Commissioner General under the tax law. Okay, under the tax law. So that's fine. Let's continue. I want us to look at refunds. Refunds. Any question on recovery of taxes? Any question on recovery of taxes? Okay.
Receiver, when he sells the asset, the proceed, how he should disburse it.
Yes.
There's the subsection 5 of that section 59. It says he should pay after paying some priority debt. And that side, that's 59. 59 subsection 5. That's the A part.
Yes.
A receiver shall, after receiving notice under subsection 4, sell sufficient relevant asset to raise the amount referred to in the notice after payment of any debt that has priority. I'm not clear on this. Yeah, that particular side is where I'm not clear on, because when you go down,
as far as the receiver is concerned, whatever proceeds he or she receive, okay, the tax liability is paramount. Okay, the money owed to the state is paramount. It comes first before any other thing. Okay. I think we read it somewhere.
Yeah, it is there, and the same place when you go down. But so does that mean the A part sells relevant sufficient assets to raise amount?
I know your concern is with this word, priority.
Yes, including debt. After payment of any debt
that has priority.
So are they talking or referring to the tax itself or as debt?
Because of the knowledge I have of the sections that follow, I would always say that the tax liability is a priority. Do you get it? Because if you read down, like you read for us, the law clearly says that that tax liability should be given priority when it comes to disbursing the funds.
That's the next subsection, the 6.
There's 6, right?
Yes.
In making payment out of the proceeds of the sale, a receiver shall give, you see, priority to unpaid taxes over all other debts of the taxpayer.
So, I'm just trying to find out which one comes first.
Or do you think there's another priority, something more important than the tax debt?
From the 6th, then the debt comes first, but from the 5th, the A party, after payment of any debt, that has priority. Okay. Unless maybe I consider the debt here under the 5th as like the tax.
Okay. I will note it down and seek further clarity on the matter. When we meet next week, Wednesday, I will throw more light on that for you.
Thank you very much.
But I am guided by 6, that once this one says that shall give priority to unpaid taxes over all other debts of the taxpayer. So that's well noted.
Thank you.
So let's go to refunds. So we want to start from section 63 and move on. I pray that we get a question on refunds. Okay. Apart from what we are going to read here, the VAT Act also has its peculiar provisions when it comes to refund. Okay. So who is going to read for us? Madam Comfort, kindly read for us.
Limit on tax reduction. In assessing, collecting, and recovering tax, the Commissioner General shall ignore a tax reduction, except where the tax reduction is sanctioned by the law. Subject to Article 174 of the Constitution, a ministry, department, or agency shall not negotiate or enter into an agreement for the waiver or variation of tax, except with the approval of the minister. Reporting of the tax reductions. Now, the Commissioner General shall submit to the minister a quarterly report on the total of amount reduction of tax granted to or claimed by taxpayers. 2. Each report of the Commissioner General shall categorize reductions of tax by reference to A, reductions granted that comply with Section 63, subcategorized by reference to 5. Each statutory provision by which the reduction is granted, and II, any criteria or factors set out in regulations. B, reductions granted that do not comply with Section 63, including reasons why the reductions were granted. And C, reductions claimed.
Hello.
Hi.
I can't hear Madam Comfort again. Is she having network challenges?
Okay. Yeah, I'm back. I'm here.
Hear that you are back. So let's take the C again.
So reductions claimed, but not granted, including reasons why the claims were not granted. Remissions. Can I be heard?
Yes, we can hear you.
Now, the Commissioner General may remit tax that has been assessed, but only on grounds of impossibility of collection of the tax. 2. Where a person who is liable to pay a penalty shows good cause in writing to the Commissioner General, the CJ may A. refrain in whole or in part from assessing the penalty. B. Extend the time of payment of the penalty on conditions that the Commissioner General may determine. Or C. Remit or waive in whole or in part a penalty that has been assessed. 3. Now the power in subsection 2C may be exercised whether or not the penalty has been paid and whether or not proceedings for an offense have been commenced or concluded. 4. In this section, a penalty includes an asset liable to forfeiture or seized by the Commissioner General on grounds that the asset is liable to forfeiture.
Okay. Before you read section 66, I want to show you something. Let's see. August 2023. August 2023. Okay. So let's look at question 4. Okay, question 4. Was Ima, please read question 4 for us.
Okay. Question 4A. One of your clients, Nene Ababio, was recently audited by the GRA. At the exit conference, the GRA officer informed Nene that he has overpaid his tax by 1, 2, 3, 4, 5,000 Ghana cedis.
What kind
The
of number is
123,450 cedis. The GRA has confirmed the overpayment by a letter to Nene. Nene has referred the letter to you for your necessary action. In fact, Nene has indicated to you that he wants his money within 2 weeks. You are required to educate him on the steps involved in claiming a tax refund. Your education should cover the following areas. A. Application for tax refund under Section 66 of Act 915. II. Decision on application under Section 67 of Act 915. III. Payment of tax refund under Section 68 of Act 915.
So refund alone is a 15-marker question. Okay. Now,
you don't know,
he said?
I'm saying if you don't know, you don't know.
Okay. Now, armed with this question, Madam Comfort, kindly continue with the reading. Application for tax refund.
A person may, within 3 years of the relevant date, apply to the commissioner. Is it within 3 years? Wow.
Yes, so.
A person may, within 3 years of the relevant date, apply to the Commissioner General for a refund of tax paid in excess of the tax liability of that person. Now, the Commissioner General shall prescribe the form of the application. 3. An application for a tax refund shall be in writing and contain an explanation as to how the excess is calculated and attach evidence relevant to the calculation. 4. In this section, relevant date means the latter of A, the event that gave rise to payment of the excess tax. B, the date on which a tax return is filed by the person with respect to the payment. And C, the date of the payment.
This is very important. I don't want us to go to 67 let us relate application for tax refund to the question we just read. We have seen in the law that a person may, within 3 years of the relevant date, apply to the Commissioner General for a refund. Okay? We have been told the prescribed form. You get it? And when you are applying, an application for a tax refund shall be in writing and contain an explanation of how the excess is calculated and attach evidence relevant to that calculation. Now let's come here. We have seen Nene's case, Nene Ababio. How are we going to relate this case to the I requirement? Nene wants his money within 2 weeks. Madam Belinda, you are the tax consultant. What are you going to tell Nene?
I don't know whether the 2 weeks is very possible, but anyways, according to Section 66, we would need to provide evidence for the overpayment. And here, okay, it states from the question that the GRA officers informed him of the overpayments and that they confirmed it with a letter. So I believe the letter should be enough evidence to, add to our application letter submitted to GRA for the refund. That's what I can see.
Thank you. Let's hear. Anna, are you home now? Can you talk? Madam Anna Asare. Okay, Madam Comfort. Hello, Madam Comfort. What advice would you give to Nene Ababio?
Well, I think that is the right, he has the right as a taxpayer to claim a tax refund when he feels that he has overpaid his taxes.
Okay.
And then it has to be in writing to the Commissioner General.
Okay.
However, the Commissioner General too has his set of principles he will follow. So then they're saying that he wants his money within 2 weeks. No, I'll just tell him to calm down. Then I will educate him on the steps. So the steps he can follow to request for a tax refund.
So educate him. We are listening.
Okay, so first of all, as I said, it is his right. It's enshrined in the RAA to when when he's overpaid taxes, he can ask for a tax refund. And then the tax refund has to be in writing to the Commissioner General. Now, when it's gone to the Commissioner General has a right to, when he's sending it, he has to have the computation, how he arrived at the excess.
Okay.
That he has to indicate it. Then the Commissioner General can ask for more information. However, he will then, okay, Belinda will continue from here.
Okay, Bosima, let's hear from you.
Okay. I would advise that once he's still within the 3 years, then it's okay. We can apply, but the application should be in the form prescribed by the commissioner. And when we are even filing that, filling that form, or in the way filing it, you should accompany it with, or you should go with evidence or how we arrive at that excess amount.
Okay. So in this case, what best form of evidence do you think you, the tax consultant, can attach as proof that he has overpaid his taxes? The audit report, right?
Yes.
Because we are told that at an exit conference, this happens when there's a tax audit, right?
Yes.
So that report you have received, that confirmed that the guy actually has overpaid taxes by that amount, you can attach that to make your application. Okay, that is fine. Let's look at decision on application. Decision on application. Was Ima, please read that for us.
Okay. Decision on application, section 67, subsection 1. The Commissioner General shall, within 60 days of receipt of an application for a refund under section 66, consider and make a decision that the Commissioner General considers appropriate. 2. Without limiting subsection 1, the Commissioner General may A, reject the application where the Commissioner General is of the opinion that the applicant has not paid excess tax, or B, if satisfied that the applicant has paid excess tax, make a refund to the applicant. Subsection 3. Despite subsection 2, where the Commissioner General is not satisfied that the applicant has paid excess tax, the Commissioner General may request further information as may be reasonable in order to make a final decision on the application.
This one
4. Okay.
has already happened. Okay.
As a result of the tax.
Already happened.
Okay.
Do you know why? If you see this in the law, may request for further information. It is talking about audit. And this excess tax has been confirmed by the just ended tax audit. Bosima?
Sure.
Do you get it?
Yes.
So please continue.
All right. 4. The Commissioner General shall serve the applicant with a written notice of the decision made under subsection 2 or 3 within 30 days.
Hold on.
5. Okay.
Let's establish the connection between 4 and 1. 1 is saying that the Commissioner General shall, within 60 days of the receipt of an application for a refund, consider blah, blah, blah. Then 4 is also saying that within 30 days. What is the difference? What is the difference between 1, subsection 1, that says that the Commissioner General shall, within 60 days of receipt of an application for a refund under section 66, consider and make a decision that the Commissioner General considers what? Appropriate. That is to say that the Commissioner General has what? 60 days to respond to the taxpayer. Okay. Now, 4 is saying that the Commissioner General shall serve the applicant with a written notice of the decision made. Okay, so here it is referring to only subsection 2 and 3.
Yes.
Within 30 days. Okay, Bosima, please continue.
So that means that's where he can decide to reject when he's not satisfied.
Yes.
Okay. 5. Pursuant to subsection 3, the Commissioner General shall reconsider the application and make a decision by serving notice on the applicant within 60 days of receiving the original application.
Okay. So we have also seen decision on application. When the Commissioner General receives the application, how he would decide on that particular application. Nene Ababio is telling you, the tax consultant, that he wants his money in 2 weeks. Meanwhile, we are told that the Commissioner General has 60 days to respond to us, to communicate his decision to us. Will his expectation of getting the money in 2 weeks be realized? Madam Comfort, will that expectation be realized or met?
Nah.
Nah.
The chances.
Okay, let's continue. Payment of tax refund. Madam Comfort.
Payment of tax refund. Now, when the Commissioner General is satisfied that a person has paid excess tax, either on application for a refund by that person or by reason of an order of the court or tribunal, the Commissioner General shall A, apply the excess in reduction of any outstanding tax liability of the person and refund the remainder to the person within 90 days of making the decision.
Have you seen it? Already the guy has taken 60 days to respond to you. Now, for him to pay the money, he needs how many days?
90 days.
90 days. Madam Comfort, can't you see that the man is very powerful? Now he's a lady.
I'm sure he's okay.
Let's continue.
So, B, refund the remainder to the person within 90 days of making the decision. Subsection 2, when the Commissioner General accepts to refund part of the excess tax applied by the person, Commissioner General shall refund the tax accepted, irrespective of whether the person files an objection against the decision of the CJ. 3, when the Commissioner General fails to refund the excess tax to a person within 90 days as specified in subsection 1, the Commissioner General is liable to pay interest on the amount. Yay! 4, the interest is calculated as 50% of the statutory rate and is for the period A, commencing on the earlier of the date the Commissioner General makes a refund decision under section 67, and the day the person files an objection against the tax decision that gave rise to payment of the excess tax, and B, ending on the day the refund is made.
Hold on. Bosima, did you see this thing?
Yes.
When it is the taxpayer who has to pay interest, what did the law say?
Um,
125% times the statutory.
The gap.
125%. But when the Commissioner General is supposed to pay, that one there is 50%. Anyway, this one is for academic purposes.
In Christ, this is not compounding.
Did you see compounding there?
No.
It's not there.
Hey.
But in the case of the taxpayer, compounded monthly. They didn't miss words. Madam Comfort, let's proceed. Subsection 5.
Subsection 6. Where the Commissioner General refunds tax
Did
in
you read
error.
5? I didn't
5.
hear you reading 5.
Okay. Interest paid by a person under a tax law with respect to tax not paid on time shall, to the extent that the tax is found not to have been payable, be refunded to the person with any interest under subsection 4. 6. Where the Commissioner General refunds tax in error, the Commissioner General may recover the refund as a tax plan.
I assume.
Commissioner General.
Okay. Now, we want to end with, this is known as the GRA, Ghana Revenue Authority General Refund Account. If you go somewhere and you hear people talking about GRA, it simply means Ghana Revenue Authority General Refund Account. Okay, Madam Belinda, if your network is stable, I would want you to read this for us.
Hello, please can you hear me?
Yes, I can hear you.
Okay. Section 69. The minister shall set aside an amount of not more than 6% of the total revenue collected under this act and any other enactments administered by the Commissioner General in the account designated as a Ghana Revenue Authority General Refund Account. 2. The Ghana Revenue Authority General Refund Account shall be used by the Commissioner General to make payments for A. Refunds due under this act, and B. Refunds due under any other tax law. 3. Where at the end of a calendar year, there is an amount outstanding as credit in the Ghana Revenue Authority General Refund Account, after refund certified by the Commissioner General has been paid, the outstanding amount shall be paid into the consolidated fund by the Commissioner General in accordance with the Financial Administration Act 2003, Act 654.
Please,
And
this
the
has been
financial.
amended. Okay. This has been amended. So it is now the Financial Management, the Public Financial Management Act, right? Hello.
Okay.
Okay. So that is it. The Ghana Revenue Authority General Refund Account. So, Madam Belinda, in your own words, how can you explain this to maybe a colleague in the office? Today you read about this and you want to explain to the person. How would you explain to the person?
Okay. So I'll say that after Ghana Revenue Authority have collected all revenues in the calendar year, the minister, that's the finance minister, sets aside 6% of it into a designated account called Ghana Revenue Authority General Refund Account. And that's used purposely to make refunds to people, like the question we just read. So make refund to the gentleman. So that's it's from that account that's such payments or any other liability that falls will be paid from.
Okay. And at the end of the year, whatever is left please end with that one for us.
Yes. So at the end of the year, whatever is left will be paid into a consolidated fund. Please scroll that. So it means, yes, a consolidated fund. Okay, yes.
That's a good one. Let me hear from Madam Comfort. Madam Comfort, in your own words, tell me something about the Ghana Revenue Authority General Refunds account. Your sister has done her own. Oh.
I swear. And my mind has just gone blank.
Okay,
let me go to on the spot.
Let me go to Bosima, then I'll come back to you. Bosima, in your own words,
Okay, man.
explain to me the Ghana Revenue Authority General Refunds account.
Okay, what I noticed is always is commissioner, but this one there is the minister setting aside the amount. That's 6% of the revenue collected during the year. But maybe because the name is...
Hold on.
Okay.
6% of the total revenue collected under this act. Okay. Under this act and any other enactment administered by the Commissioner General. It's very, do you know why I'm stressing on this?
That's
those within the which industry is that? The tourism industry. Those who charge the 1% tourism levy. Do you know that levy is not administered by the Commissioner General? Hello, Boss Emmanuel.
Not really, but I'm taking it.
Okay. So now just explain to me and we'll bring to this.
Yeah. And then maybe because the name is General Accounts, refund under this act, any refund under this act can be paid, should be paid from it. And again, refund under any other law can also come from
administered by the Commissioner General will also be paid from this account. Okay.
That's good. And the excess at the end of the year goes back to the consolidated account.
Okay. Okay, that's fine. Refunds due, blah, blah, blah. Okay. Madam Comfort.
Yes, I'm here.
At least you've heard something from Bosima.
Yes. So let me just quickly repeat what he said. So the GRA is an account set aside where the Commissioner General will put an amount of not more than 6% of all the revenues you receive under the Act into it. Now, the Commissioner General is the one in charge of that account, and then they shall call it GRA. Now, what will he use it for? He would use it to make payment for people who ask for a refund.
Okay.
Okay. And then at the end of the year, when there's outstanding amount after making all the
refunds have been paid, the remainder is paid back into the consolidated fund. Great, great. Mr. Yusuf, you are welcome. Hello,
thank you.
Yusuf.
Thank you.
Great. This evening, we have looked at recovery of taxes from third parties. We have also looked at refund of taxes under the Revenue Administration Act. And we are just discussing the Ghana Revenue Authority General Refunds Account. Exactly. So I'm sure you've heard something about it.
Yeah, sure.
Something that you can explain in your own words.
Hello, are you saying I should explain that?
I mean, in your own words, if you are asked to explain or write short notes on the Ghana Revenue Authority
General Refund account. An account that a percentage of revenue collected, I think is it 5 or 6%?
It's 6%
of revenue that is collected is kept into that account to take care of possible objections and then refunds that are to be made to taxpayers. As and when it is due to be done. Yeah. So I think basically it is a provision, a risk. What would I even say? A risk-based account, kind of a provision made to take care of possible objections and refunds of taxes that are to be made to taxpayers as and when it is due. Okay. And at the end of the year, when all objections and all refunds have been made, the difference, if any, is transferred back to the consolidated fund.
Great. That's a very good attempt.
Yeah.
Now, Bosima, just give us a quick recap of the refund process, okay? Bearing in mind the question we looked at, Nene Abebio. Just for Mr. Yusuf to also know what we have looked at today.
Okay. The refund process starts with application by the taxpayer will need to make an application, and the application should be in the form prescribed by the Commissioner General. And he has within 3 years to do that. And on the application, the Commissioner General has a number of days to make decision on that the application. When he's satisfied, then he has within 90 days to make the refund to the applicants. And if he delays or he feels, it attracts a penalty of 50% of the statutory rate.
Okay.
Yeah.
Excellent. I think we can also add that when the taxpayer is making his application, the taxpayer is required to attach evidence of the excess payment of tax, okay, to the application. But with reference to the question you are seeing on the screen, Nene Abebio is in the possession of a tax audit report showing that he has overpaid his taxes by 123,456 cedis. So that should be sufficient enough for him to attach to his application. Thank you. Then lastly, we also want to talk about recovery of taxes from third parties. Okay, just give us a quick recap on that, then we end today's session.
Okay, recovery from third party. With that, we have 3: a manager of a firm, receiver, third party data. Okay, then there are 4, and we have recovery from agent to non-resident or something like that, agent of a non-resident person. So among all these 3, one thing that runs in common is when you are picked as a third party, then straight away on the point of service of notice by the commissioner, the the liability becomes a personal liability to you, the third party. But with manager, when you exercise due care or you act in a prudent way, you are released, or this clause does not affect you. But even though when you are when you are a third party to a debt, after payment of the liability, you have the right for refund by the company or whoever. You, especially with the manager, when you do a payment on behalf of the company, when they are in good position, they can pay you back the money.
Okay. Okay. In the case of managers of entities, you remember that there is an exception to the due care and diligence, that partners of a partnership are exempted. Do you remember?
Yeah. Yes.
Okay. That's fine. And under that one, I think we looked at a question. Let's see the question that we looked at. So, Mr. Yusuf, we look at this question where candidates were asked to make a presentation on managers of entities, receivers, third-party debtors for 20 marks. So, I am encouraging all of us to also take a look at recovery of taxes from taxpayers. Okay? If the examiner has tested candidates on recovery of taxes from third parties, it is possible he can test candidates on recovery of taxes from taxpayers. And how does he do that? He does that by the creation of charge over assets. Okay? Restraint of persons from traveling or leaving the country. So please look at that and you will be fine. Any question? Any question?
Yeah, regarding the objection procedure.
Okay.
The question, I think I heard my senior colleague say, I mean, the objection has to be, you have within 3 years to file the objection. Is that right?
Okay, so this is what the law says. Application for refund. Can you see that on the screen?
Yes, yes.
A person may, within 3 years of the relevant date, apply to the Commissioner General for a refund of tax paid in excess of the tax liability of the person. You can see that.
Yeah.
Within 3 years. Okay, any other question?
So, and then he says that the Commissioner General has 30 days within which to respond to the objection.
Commissioner General has 60 days.
60 days.
Yes. The Commissioner General, here is it. The Commissioner General shall, within 60 days of receipt of an application for refund under Section 66, consider and make a decision that the Commissioner General considers appropriate.
Okay, but
now that after this, when he now decides that he wants to pay, where is that one? The payment, he has to do that within 90 days. I'm looking for that provision.
With the payment?
Yes.
That's 68 subsection 3. Yeah, somewhere. Yes.
Where, okay, so you see this one. Within 90 days. So the lady is just buying time. First 60 days, then 90 days. Just buying time. Mr. You see, very fine.
Yeah.
Okay.
Okay.
Colleagues, any other question?
Okay. Thank you. Can you throw light on that exception to the manager's partner of a partnership firm, a manager to a partnership firm?
Okay. So, manager.
Subsection 4.
Okay, so we are told in subsection 3 that subsection 1 does not apply to a manager who has exercised the degree of care, diligence, and skill that a reasonable, prudent person in the position of the manager would have exercised in preventing the initial and continual failure to pay tax. Subsection 4. Subsection 3 does not apply to a manager who is a current partner of a partnership. So in the case of a partnership, whether you exercise a high degree of care, skill, diligence, you are liable. Bosima, do you get it?
Okay. That's it, Mom.
Do you get it?
Yeah.
For all others, once you exercise, in the opinion of the Commissioner General, you have exercised a degree of care, diligence, and skill, you will be relieved. But for partnership, lalai, you have to pay.
Then I think beginning, what of a proprietor to a sole proprietor?
Oh, boss, we read the thing together.
Yeah,
Well, you want to make an addition to the law.
I'm beginning that maybe because the partner is so close to the entity, that's why they are exempting them, or they want to enjoy that. What of a proprietor?
Anyway, that's the
So
provision of the law.
Okay.
So on that note, I would want to thank all of you for making time to join this evening's intervention. Gradually, we are bringing our discussion on the Revenue Administration Act to an end. We'll also look at the VAT Act, look at some relevant provisions in the Customs and the Excise Duty Act. So, like we always do, Mr. Yusuf, we are privileged to have you. So you give us a closing prayer.
Hello.
Yes, sir. Can you hear us?
Yeah, you said.
Kindly give us the closing prayer.
Okay. Alhamdulillah. We thank the Almighty Allah for, the opportunity to gather here to learn. We hope and pray that whatever we have learned would be beneficial to us during the exam and after. We pray for guidance for our facilitators, that the Almighty Allah would continue to open up our brains and our understanding, so that the few days that are left, because in fact, we are almost there, we'll be able to cover whatever is necessary for us to be able to pass the exams. Allahumma rabbana atina fid dunya hasana wa fil akhirati hasana wa qina azaban nar wa adkhilna jannata ma'al abrar ya aziz ya ghafar. Inna Allaha wa malaikatahu yusalluna 'alan nabi ya ayyuhalladhina amanu sallu 'alayhi wa sallimu taslima. Subhana rabbika rabbil izzati amma yasifun wa salatu wa salamu 'alal mursalin walhamdulillahi rabbil alamin. Amen.
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 Thank you, sir. Mr. Yusuf, if you get a question asking you to complete a tax return, would you be able to handle it?
I'm here to go to the discussion. I think we did something of that sort, so I have to go back to it before. Currently I'm now in Accra. I'm going through the audios, the discussion audios. So I'm sure if I'm able to go through that, I should be able to do it.
Okay. So what I recommend you do is that we have solved some questions on corporate income tax.
Okay.
Use that information to complete a CIT return.
Okay.
We have solved employment income question. Use that one to solve a personal income tax return. We have solved VAT question. Use that one to complete a VAT return. Okay. I think during the early stages, we solved a question on withholding tax.
Withholding tax,
Okay. The Onipenia and all those questions. That question with plenty withholding tax. You can use that schedule to complete a withholding tax return, just to make sure that in the event that the examiner decides to test us on how to complete a tax return, we would all be able to give a good account of ourselves. Madam Belinda, would you be able to complete a tax return?
But you stop calling me in the morning.
Come again, sir.
Then you stop calling me in the morning for the class.
I have repented.
Thank you.
I have repented. Madam Belinda. Okay. She can't hear me. Madam Comfort, would you be able to complete a tax return?
Yes, I'll be able to.
Great. Bosima, would you be able to do it?
Yes, and I would declare that it's complete and accurate.
By tax consultant.
I beg, just write your name and sign for them and get your mark and go your way. Madam Anna, would you be able to complete a tax return in the exam hall? Okay.
Oh, Belinda and Co have gone.
Yes. Okay, so colleagues, thank you very much for your time. We'll meet next week, Wednesday, to continue our discussion on tax, admin, and ethics. Good night.
Sounds good.